Hi, everyone. It was another good overall session for the stock market as we go into this holiday weekend or week. It's been a long weekend, everybody, bottom line. But overall, things are really good. If we go ahead and get rid of all this and we just look at the oscillators here on our indexes, volume is going to be lower across the board today. So who cares about volume? Let's get rid of it. You can see that we continue to work off the overbought conditions on our oscillator MACD. TSV has now established higher highs and higher lows, so that is short-term bullish, while the NASDAQ is hitting new highs. So all in all, everything is right in that world of the NASDAQ. S&P 500, same thing, hitting new highs, but look at us work off the overbought conditions still in MACD. We now have a series of higher highs and higher lows in the S&P 500's TSV. So all is right in that world. Going to the NASDAQ 100, the brother of the NASDAQ, the New York Stock Exchange, brother SP 500. You can see the same things there. Dow Jones Industrial Average still working off the overbought conditions, yet here we are at new highs. And the Russell 2000 hitting new short-term highs. This index, however, not only is showing bullish positive divergence on TSV, but is also now showing it on MACD. And switching over to the stochastics, bottom window pane here, you can see stochastics have turned higher, crossing above the moving average. That is short-term bullish for the Russell 2000. NASDAQ has begun its hook up. That is short-term bullish. NASDAQ 100, the hook up has begun. Dow Jones Industrial Average, hook up. NYSE, hook up. S&P 500, hook up. So everything looks good here on the indexes, especially now that we're in the seasonally bullish time, end of the year run. However, a couple of bad things did happen today. AFSI has given us a partial sell signal. It is closing below, oh gosh, so many different panes. It is closing below the 20-day moving average on above average volume. Remember, we're under a buy signal across the board, so this is only a 25% sell. And remember, if it reverses higher in the next day or few, this position must be put back on. But for now, AFSI is at 25% sell. Speaking of positions, needs to be put back on. SAIA decided to take me out of a partial position on the 17th whenever it dipped below the 50-day moving average on above average volume intraday. That got me out of some of my position. I'm not exactly sure how much. I will check on that tonight. But whatever that was, I am now putting it back on because the past couple of sessions, while they were good, it wasn't a clear reversal. Today is a clear reversal of that sell signal, so SAIA needs to be put back on. And the only disappointment today is Guild. Now, I need to make it clear. Going into the holiday shortened week, there is no way that I thought, remember, I'm fully invested here, so I don't have any capital to really trade willy-nilly in my cash accounts for day trades. And whenever I don't have any cash there, I really don't day trade in the margin account because the margin rates and everything is still above my head. I just don't understand. I need to have somebody sit down with me and go over exactly how margin works because I tell you what, after almost doing this for 20 years, it still just blows my mind how I don't understand and can't comprehend exactly how much cash I have available to the margin and how much the interest is on that margin. So I try to operate on a cash only basis. You really don't, you don't need leverage unless you're 100% sure that we're in a rock roaring bull market. And when we have no bears out there, we have no 20% corrections in the market, I'm just not that excited about margin. But had this been any other normal day where I'm not fully invested, I wake up in the morning to see how the market's doing before the opening bell, and I would clearly see that Guild is gapping down to the 96 level, and that would automatically erase this new long position that was given on Friday. So if you woke up this morning and you noticed that the price was trading below 104.64 pre-market, that's it. This trade is a cancel. This is not a go. Even if it opens at 96.60 and goes to 150 intraday, the fact that it's opening up at 96 means the trade needs to be canceled. I did not wake up early this morning. I slept in, woke up at the normal time that I normally wake up, 6:30 in the morning, 7 a.m., going to check and see Guild has done what it's done. Now, whenever I check it, Guild is currently printed around 95. It's only down $1 from where it opened, and I'm thinking, okay, I see the news. I understand now why it sold off. It's not like that they've lowered estimates, missed earnings or anything like that. So I believe that by the end of the day, it has a chance to come back. That did not happen at all, so we now have almost a $4 loss from our morning entry. and that is a full sell. So Guild is a full sell. This trade shouldn't have been taken. A normal human being that doesn't live on Maui was able to wake up in the morning, see Guild down. You now know further on out, if this ever happens again, the trade's off. Trade would have been off if I just would have woken up at 4:25, would have looked. This trade wouldn't have happened. But the mere fact that I woke up at 6:30, the trade did happen. So Guild is a full sell. There were a couple of long signals tonight. EXAM is a bit of a choppy, volatile stock. You can kind of see it here on an arithmetic chart. It's kind of like a V-shaper, and so I don't like to buy V-shaped moves at the high of a potential V move. So EXAM would not be a new long signal unless it based out sideways here and then gave a pocket pivot point signal exactly off the 50-day moving average. Still one to watch. Earnings per share has exploded the last 2 quarters, and sales growth has been quite impressive. Also, ALLY is one to watch. Nice surge in BOP volume and price today. Still within the pattern overall, as you can see here on an arithmetic, it's pretty deep within this overall base. So until at least breaks up above the Friday intraday high of 23.91, this one is not of interest to me, but it was a nice stock, so I flagged it. And then there was also HCP was the other flag that I'm not taking. This is a CanSlim quality stock breaking out. It's not that exciting to me. I'm not really that into it. Whenever I have an ad signal in a long-term portfolio holding like DTSI. DTSI is part of the big wave trading long-term portfolio. Recent buys have been DTSI and SAFM, which has not triggered a buy signal yet. We are still waiting for SAFM, which is now passed and qualified for my growth, low PE, dividend, story selection criteria. But DTSI is giving an ad signal with this bounce off the 50-day moving average. It's already done it once, and it could have been a long on the 18th. I didn't take it, but I've got now a confirmation ad off the 50-day moving average, so I will be taking this position as a new long position. Not a new long position in the short-term account. 2.5% of the account capital goes into this. Besides that, there is nothing. Also flags CDZI as a potential momentum play. This would have been a long signal if it would have closed above the open of 1156. I would have put 1% of my capital in it. As of right now, that is all that we have. This market looks healthy overall. I do not recommend fighting this trend, especially in the seasonally bullish time of the year, Christmas week and New Year's Eve week. Aloha.